Welcome to Friday's market wrap-up. I'm Matthew Buckley, the Chief Investment Strategist here at WCI, or Wealth Creation Investing. Welcome aboard. Just another crazy week in the market in what we've been calling a bipolar market here at WCI. Real quick though, before I forget, I want to let you know that we're having a special risk management session on Wednesday, May 2nd. So you can just go to this page whenever you get a chance, or actually at the end of this video, it's going to redirect you and send you there. But topgunoptions.com/academics-risk-management. And just kind of scroll down and you can register here to reserve your spot. I'm going to give you a checklist on how to manage risk in this crazy market. So let's get started. What happened this week? What didn't happen this week? Well, Apple knocked it out of the park, simply knocked the cover off the ball. But you know what, folks? If you've been investing for a while, you know that Apple tends to under-promise and over-deliver. They tend to sandbag, and the market just loves it. Apple sold off into earnings and then went up huge, and then now we're seeing it kind of back in line. What also happened this week? The Fed met for 2 days, and the Fed chairman came out and really, it's crazy, folks, because what's bad news for the economy is good news for trading. And what's bad news for trading might be good news for the economy. What do I mean by that? The market is seeing, like, for example, today we had bad GDP numbers. Real GDP growth came in way lower than expected there. Business spending drop trims U.S. growth to 2.2% versus expectations of 2.7%. That's a big swing and a miss, folks. So GDP isn't looking good, but when the market sees bad news, they tend to see good news because, like the Fed chairman said on Wednesday, he's standing by with the fire extinguisher, or not even the fire extinguisher. He's standing by with another punch bowl of QE3, quantitative easing 3, ready to pump money to keep this market afloat, because he still doesn't believe, as do you and me and folks on Wall Street, that this economy is in any sort of recovery. So the market tends to just keep on drifting higher. We're near historic highs on the Dow. 13,264 mark was the high we saw before the financial tsunami wrecked everybody in the late 2007-ish. So Dow's over 13,000, Nasdaq over 3K, the S&P's over that psychological 1,400 hump there. And then what also happened? Amazon just blew the doors off of earnings as well. So great week for trading. Ups, downs, all over the place, and we're getting ready for the old sell in May and go away, and we're going to see if that really happens. Real quick, again, make sure you join us for that risk management webinar. Our positions over at Top Gun Options, a WCI subsidiary, we're having a blast here. Again, if your trading screen does not look like a Christmas tree or the control panel of a submarine with some reds and greens, you're not hedged. If it's all green or all red, you're doing something wrong. But our performance since I took over the model portfolio on March 1st, not too bad for 2 months, March, April. That's $8,000. Model portfolios made over $8,000 in 2 months, so that's averaging $4,000 a month. So that's not too shabby. And you can always give one of those model portfolios a test flight at Top Gun Options. So again, big week in the market, getting ready to end April here. It's been a wild month, and get ready for the dog days of summer. But stay tuned for WCI for some great, we're going to have our equities event coming up, and also, like I said, make sure you stop by our risk management session next week on May 2nd. Matt Buckley, the Chief Investment Strategist here at Wealth Creation Investing. Hope you have a great weekend, and I'll see you on Monday's brief.